on paper?
Yeah, I have a slide here in a little bit that I'll show you a breakdown of an example of a $640,000 loan amount. And then I'm going to update it with current rates because that's at 6%. So I'll update it and I'll send that out to everybody just as an example what that looks like.
Thank you.
Can you share, Jesse?
Coming in hot.
Coming in hot.
All right, can you guys see that?
We can, yeah.
Start slideshow from beginning. All right, do you guys have the whole screen or just the presentation?
Just the presentation.
Okay, cool. All right, well, I'm Jesse Bopp. Thanks for your time today. This is my personal cell phone. If you guys have any questions or you guys are chit-chatting about a buyer with the 2-1 buy down and just need a little bit more details or whatnot, text me, call me. If your lender's not on call right now, they're not doing their job, right? So just make sure you guys are using this as a resource to get the buyer to understand what is really going on, right? So first depressing slide of the day is today's rates. So today 30-year fixed is over 7%. It did go down a pinch from yesterday. 15 years, there used to be a huge spread between a 15 and a 30, but just with rates where they're at with the compression of the cost of actual loans, it's just that's not that big of a spread anymore. Jumbos, you are seeing that correctly. They are a little bit more affordable than a 30-year fixed on a conventional. And that's because they can kind of play by their own rules, but their guidelines are a lot more strict. So it's going to be usually a minimum of 20% down and 6 to 12 months of reserves. And that means if you have 3 homes and they all have, $300,000 or $3,000 payments, you're going to need 12 months of 3,000 times 3, right? So you're going to need a lot of reserves, not money you technically have to put into the transaction, but just as reserves if those renters do not pay their mortgage, right? So some jumbo investors are a lot more strict with their reserves to where you can only use a certain amount of investment accounts. A lot of it is going to be cash on hand. So if you have somebody pre-qualifying for a jumbo loan, the first thing I would ask is, are they good on reserves? Because if they're not, that's a tricky thing because when you run it in the AUS system, you're always going to get an approved ineligible because it's over the county loan limit, right? So just make sure you're asking questions on reserves because that's usually the biggest thing that will, throw a jumbo loan off the rails. 5-1 ARM, that is going to be about, close to 1% lower. I would not love an adjustable rate in this market. If there was a bigger, spread, it might make it worth it. But no thanks. FHA, is always going to be a little bit lower, but even that has kind of crept up and, very similar to the VA loan. We'll kind of go over, FHA and VA, later in the presentation about assuming the loan. That used to be a thing way back in the day. I'm sure, Jared, you've dealt with a couple of those back in the day. Kind of not a thing recently, but with rates being, where they are now, assuming a loan might be a great option for some of you people that are listing homes that currently have a FHA or a, correct. You can do USDA too, but those are few and far between.
I was going to say, who has a USDA loan? Hey, here's a question, Jesse. What's the jumbo limit? What sets a mortgage at, or financing at that jumbo threshold?
So if you are over the conforming loan limit, which is now 700 to 713, depending where what county you're in and what lender you're looking at, any $1 over that loan amount makes it a non-conforming, which now just makes it into a jumbo. Every investor is going to have their max loan amounts for those loans. Some will be 1.5, some will be 5 million. Most of them are going to be, capping at the 2 to 3 million. Because anything above that, it's either going to be like private money, private equity money, or at that point it could be a commercial loan, which then could be, up into the 5 to 10 millions. So, so anything over that, and there's usually no. There used to be a really cool product that we used once for Jared's clients that was 10% down jumbo. That is gone now. So most of them are going to be 20% down. So anything over $1 over that county loan limit. So if you guys are doing anything way up north or way down south in Colorado, or with David out there in Florida, your loan limits are going to be drastically different than the county loan limit in Denver, which is going to be 715.
Thank you.
But every investor will, kind of be different. And, we're getting a whole bunch of more options for investors for jumbo loans, non-QM. And when I say non-QM, that essentially is just like a jumbo loan or a bank statement loan or a DSCR, which is going to be your credit stuff, which we have some details on that I'll pass on to Jared and team in a separate email as well.
Appreciate it.
All right. So this is an application rate versus your interest rate. So the app rate is going to be in the shaded area. So that's your applications over 1 year. And then your interest rate is going in the opposite direction. So this is, it's always going to correlate, like the higher the rates go, the less people are going to be applying for loans. The FHA is actually, been flat to actually increasing a pinch, just because now people need a lot more room on their debt to income because of the interest rate. So when you are taking, borrowers out, I would make sure, hey, can they qualify for FHA and or conventional? It used to be like, hey, can we make these go conventional? Now I'm hearing a lot more, hey, do we have more room if we go FHA? Right. So there's a couple of things you need to keep an eye on FHA things, especially with condos. But yeah, it does give them a lot more wiggle room, and the interest rate tends to be a little bit better. And it's the biggest thing for me is making sure where their credit is. If they have under 700 credit, they're pretty much going automatically into an FHA loan, just because the mortgage insurance will kill them on a conventional loan.
Jesse, would you attribute refinancing to the app decline alongside just obviously a decrease in purchasing?
Oh, sorry. So it's down more. So if you look at the very bottom of that, week over week, it's down 2%. A lot of those apps were down 86% when refinancing over the year, over the last year, and then we're down 39%, which is a huge, drop as far as purchase applications go. So it is a big jump. A lot of that decline is refinancing, but when you're seeing week over week declining in purchasing, that just means people are getting scared with these rates.
Well, and I think if I was just to throw a note out maybe to the group is, this might be a stat to share with sellers, we're at a 40% decrease in actual buyer applications. So when we're setting price or we're anticipating traffic, we should probably share the fact that there's a 40%, decrease in the number of buyers actually, looking to get into the pool for purchasing.
Yeah. Open house, you might see 10 to 20. Now you're going to see 6 to 8, so, or 3, like the last one that my assistant went to. It was a really cool house, and they did 3 people come in 6 hours. I was like, that's too long of an open house anyways. So, but that's what the seller wanted. So, yeah. And then this kind of, you'll see once, if rates go back down to under 6s, you will see that start to increase, because like just that 7 number is kind of when people start kind of getting, scarce. But the biggest number that we are kind of worried about in the mortgage industry is going to be that double digit, mortgage rate. That's when it's going to really start to curb people not even, inquiring about mortgages, because they're like, nope, I'm out. So under the 10% mark is kind of where, we want it to keep, but the Fed is going to keep increasing the interest rates, and it doesn't have a direct correlation with mortgage-backed securities or, with mortgage rates, but it does have a long-term effect, right? So there's a couple of different things that do affect those things. Inflation, the CPI, which is the Consumer Price Index, which is higher than it has been in a really long time. The job market, the job report that came out last week or the week before was really strong, and that was not great for mortgage rates, because if people are still working and they still have money, what we're trying to do with inflation is to slow buying down, because during COVID, when we were giving all these, PPP loans and all this money for, people that were kind of hurting, some people were taking that money as well that didn't need it. Now we have an influx of money. Now our dollar's worth, nothing. I was reading something yesterday that 1970 our dollar was worth $1, and that dollar now is worth $6. So you have to use that dollar to buy $6 worth of things. So it's up drastically as far as inflation goes. So here's a quick snapshot from 1970. This is the happy slide that we can kind of show some people. So when we're looking back all the way when they actually started tracking, rates with the MBS and the secondary market in 1971, You're looking at 1980 to 81 were the highest at 18 to 19%. So it's not, it's not as bad as it's ever been. It's actually not even at an actual historical above average, which is the next one I'll show you. So the average is 7.76 over the last 30 years. I'm guessing with, our, recent, increases, I'm guessing it's, going to be a little bit higher than that because we are in the sevens. But when you do have a first-time home buyer, have them talk to their parents, talk to their grandparents and stuff like that. Like I welcome grandparents and parents coming into these meetings because oftentimes they'll talk like what Jared did with his first and second lien, 15%, 16%. Like, oh, when I refinanced to 9%, I thought I was stealing from the bank, right? So it's all on how it's doom and gloom. It is, but what we need to understand, as this may be just me talking to myself, is this is temporary, right? Everything in our world is temporary. If you're just having if business is slow or if rates are high, you're just having a bad day, that, everything's temporary. And that's what we need to talk to these buyers about. We'll kind of go over a rent versus own situation at 8%. And, I'll kind of do a live, thing with this thing that you guys can use with your first time home buyers to see what they're actually saving. Right. So, it's doom and gloom, but it's all on how we spin it. Right. Just like when the appraisals were always coming in low. Well, good news, bad news. You only have to cover 15,000% of that appraisal gap versus the 50 that you promised. Right. So it's just on how we spin it. But, and it's actually a lot of knowledge stuff too. So I feel like I'm turning into more of like a teacher, with a lot of these first time home buyers right now, but it's actually helping them to understand, this is a temporary payment. What we don't want to promise, and that's why I'm telling all my people, all my teams, don't promise people a refi. So if values do kind of, level out and they put 3% down and all of a sudden they have a couple of homes that sell, for under market, then they might not have enough value to refi, right? So we want to be perfect with that. We want to be careful with promising a refi in a year or two as well.
Right.
So say, hey, if the stars align, you could save X amount.
Right. I like it, but I mean, these are great slides just to share even with buyers. Over the last 50 years, the average rate was 7.76. Well, shoot, we're not even there yet.
Yeah. I mean, it's not. And, if they do, if they do get up into that realm, keep in mind, you're also getting that tax write-off on your taxable income. So it's not all bad.
Nobody remembers that part.
I'm gonna just make a t-shirt that says, remember your 1099, your 1098 forms.
I
want to hijack this, but I think what's important to remember too is though that historically rates may have been hovering in that 6 and 7% range, right? When we look back at, even I don't know, the early 90s or 70s, whatever, when those rates were like that, the housing prices to the income prices were also a lot more relevant and relatable than they are today, where our income has not risen to the extent that the home prices, inflation, and everything else has too, right? So now adding in this large interest rate on top of houses that were already unaffordable with the incomes that we're barely making today, I feel like we're just in a massive perfect storm.
So up until this year, David, you're exactly right. So up until this year, your buying power or your debt to income from 1981 until 2021 was almost identical, because you had your, base, loan amount, which was like 79K. Your income was like $35,000. So your debt to income with the interest rate of 18% was like 21%. As of this month, and I was looking for an updated slide that I'll actually send out. That was like the one thing I was looking for this morning. I could not find, is showing what the average loan amount, average income is. So up until last year, it was actually better buying power than in 1981. Now I guarantee it's a little higher, but it's still going to be under 40% debt to income, especially in Colorado. In different markets, we'll have different, average incomes and stuff like that. And the one thing that I tell people, if you're in an increasing market like Florida, like Colorado, you're not going to see a correction in home prices. And does everybody know what an actual correction percentage is in home values? If you call it an actual correction, it's a 10% correction. Do we see homes in Colorado or in Florida going down 10% in value? Maybe if you bought it for over 10% of that value, it might level back down. But a buyer that's buying now at a 7% interest rate is actually in a better long-term situation than somebody that paid $50,000, $25,000 over their, that potential, that purchase price, right? And we saw that a lot, to like, oh, you're like, oh, I'll just refinance in 2 years and, get my value down, yada, yada, yada. I was like, well, that's gonna be a little harder now. So if you're at 3.5%, that's great, but you also overpaid for your home, right? So if they go to refinance or go pull some equity out, then they might be in a little bit of trouble, right? So that's also something to, think about as well. So purchasing power, as we're kind of getting into it. So as a 1% rise in interest rates, it kind of cuts almost 11% in your purchase power down, right? So, and this is just for if you were to, if you're able to qualify on the left-hand side from the 450 to the 650, what that 1% interest rate does for you, it goes from 600 all the way down to, 540, so it does kind of cut into your purchasing power. And it will kind of, it's going to, the biggest thing is the sticker shock, because I've been doing this a lot lately where I'm showing like, hey, here's, people are asking me, it's like, hey, will you run a scenario if it was at 4%? If I ever get to refinance, is it 4% or 5%? And I'm hesitant to do that because it does, it is a skewed number, and I'm not trying to, mislead or promise somebody that this is ever going to happen. Like I doubt we ever see 3s again. I mean, if our economy is strong, we don't want mortgage rates to go in the 3s because we want a more balanced market, right? So we don't want, not that I wouldn't like that. I mean, but at the same time, we want it to be a little bit more balanced of a market, right? So in the 5 to 6 range is probably where I'm hoping it settles. And, that way we can say, oh, it's not 7 or 8% anymore. And then that way we can kind of get people into it, right? So when you're showing people this, there's another breakdown. We can kind of do a rent versus own breakdown that I'll send out. It's kind of more of a generic thing that we kind of look at, but it does affect people. So if you have people that are kind of on the fence now, but then they do qualify, rates could go up to 8% in the next 2 months, right? So if they get pre-approved and like, hey, this is, I don't mind this payment, this isn't my forever payment. There are things we can do as far as a buy down, 2-1 rate buy, or buying out mortgage insurance, which I don't really recommend doing right now, because if it does go down and you refinance, once again, if your value is where it needs to be, you might be able to get rid of mortgage insurance or at least drop your percentage. If not, you're just throwing money away on buying the mortgage insurance out. So I would not advise doing that unless you have to do it to qualify. But that's just about you getting options, from your people. Buying versus renting. I'm sure you guys get this a lot. You guys get more lending questions than probably we do in the first, 5 conversations you guys are kind of talking about. One really good thing that, my brother actually works for Schwab, and they were kind of going over this, with one of his meetings. So this link that I can kind of send out in a separate email, it does have a really good, quick rent to own or rent versus buying calculator that you can like throw in, and it'll show you, your taxable rate and all that kind of stuff, or where that kind of sits. Actually, let me see if I can go into, can you guys see the screen? Is it on the mortgage calculator sheet?
No, it's still on the presentation.
All right, let's see. Come on. All right, so share screen, new share. Here we go. On there now?
Nope.
There we go.
There it is.
All right, cool. So I was kind of doing some research this week about like, monthly average rent in Denver, for a 1-bedroom. So you can kind of, start low, because the higher we go, the more it's going to make sense for somebody, right? So renting a 1-bedroom apartment average, and this is from like RentWise, which is a cool little website, so it was at $1,994, right? So say somebody's spending $30 on a renter's insurance.
People have renter's insurance?
Oh yeah. Yeah. Well, Brittany probably did when she was growing up, not you. I'm not paying that $30. If they want to steal my stuff, whatever. Right? So does anybody know what the annual rent increase is in Denver?
3%. 3%.
Something I read was like 15 on average.
That would suck.
I'm gonna say, we're just gonna use 10%, just as a, a more conservative number, right? So then let's say a 1-bedroom condo. What does a 1-bedroom condo cost in Denver Metro now? Let's just say 420, no pun intended. And we do a 3% down. Say the taxes, are roughly, 3%. So we can go, let's do $2,800, kind of using the example I just did for a borrower. Homeowners insurance over the year for a condo, say $600, and that's even high. Maintenance, just call it $1,000. And here's what I like to, because this does not have an HOA. So even if we do an HOA of $3,600 yearly, say they're in the home for 5 years, right? We go into here, say loan term, interest rate, let's do it at 8%. Origination charge is just cost of loan. 1% if it's a DPA loan. Other services do $2,000 for title work. Other assumptions. Appreciation rate. Who's optimistic about our appreciation rate? I usually use
3%.
Yep, exactly. Seller cost, closing costs, percent of the selling price. Do 6%. Federal tax rate, even if we're at 25%, and that's just, even lower than most people's taxable income. And people might save 1%, right? So if you're looking at, this is actually, let's go 33. And we're going to renting, because this is not right. Rental increase, home purchasing 420. That's not right. So we do here 300, maintenance, let's do 500. Right. So you're going to be looking at just with this, with very meager, just very conservative numbers, just over in the next 5 years, it's 25K. Now, this is something I actually used the other day with a borrower with his exact rent to what he was actually looking at. And his rent for a 1-bedroom is like $2,700, and it was actually increasing, 15%. And so that was going to be, so this is a really cool calculation that you can actually use for people's actual rent to see actually where they're living and where they're at, right? So when you're looking at 1% discount, pull this up and assumptions. So then you're looking at, and this is if you're actually selling it, and then the longer that they're in the house, of course, the longer it's going to make a benefit for you guys, right? So this is a cool little thing that I can kind of send out. It's super fast, and that way when you're talking to somebody, you're pre-qualifying somebody, just makes you look really, like you're on top of it, and you know what you're talking about, right? So let's say at the current rate of 7%, what does that do for us as far as the, band? There's another 13 grand. So if somebody waits now where they're at 7 until they go to 8, over the next 5 years, it just costs them 13 grand, and with no equity, no tax write-off or anything like that. So
what does it look like if you were to extend that over a 30-year term?
Say again?
If you extended the time in the home.
Okay, yeah, that's loan info, time in renting, home purchase. Yeah, I mean that's a staggering number.
And I think, but I think that's big picture for most people. I mean, whether you sit in the renter's boat for the next 30 years or you sit in a purchasing.
Or if you make this a rental, right? So if you make this a rental and you don't change anything with that loan amount, say even in, 20 years, you're looking at still, that's a huge chunk of change, equity and that, renting versus buying that you're kind of throwing away right now. Taxes will go up. Insurance is going to go up, all that kind of stuff over those years. So even if you take 100 grand off that number, over the years, it's still going to make more sense to purchase. And of course, that's coming from the mortgage guy, right? And I got into an argument with the VA buyer about this kind of the same thing. Of course, the mortgage guy says it's a good time to buy. I'm like, well, he's like, are you buying in this market? And I was like, yeah, I actually just bought a second home in this market, which was probably not the smartest thing. When my wife wants to put all our money into remodeling it, but it'll be a nice place. But it is something where I am putting my money where my mouth is, where we just did buy a second home in a in a rural area. because I think it is a good investment. You know, I do think it's going to bounce back. So,
So, hey, real quick, Jesse, Kristen just asked, but you included an increase in rent each year. Was that 10%? Or
yes,
3%?
so on renting, we did 10% just as, you know, worst case scenario.
Right.
So, I mean, some of these rentals are, you know, not off, they're actually getting people to sign up early. So and they're not increasing their you know, their rent. So, you know, if we do go down to say 5% on that, that's going to just, you know, drop it a little bit. You know, and that's a huge drop, right? So, you know, but I think we're in the top 5 of markets of most expensive rent in the nation right now for Denver. And then Florida, you know, Florida, Texas, you know, some of those are going up there as well.
You know, I think this is a great exercise for first-time home buyers. And I guess why I believe first-time home buyers is because they, you know, they're making that decision to get into the purchasing market, you know, showing them the long-term benefit of them participating in home ownership, I think is a huge, I guess personally, just a huge incentive. If you're gonna retire someday, might as well be in real estate.
Yeah, exactly. And, you know, using an example of what I tell all my first time home buyers is like, hey, you know, if you want to play the game, you got to get into it, right? Right now you're on the sidelines looking in, and Brittany and I have a borrower that is running up against some tough times. They're looking at moving closer to one of her spouse's parents. And they have a decent amount of equity in that home, and they're going to be able to sell it, pay off all their debt, and still have some cash in the bank to possibly buy another home. Right. So, you know, and this was something where they barely squeaked in 2019. Right. And this was up in Bailey. They, you know, pinched in every cent they could save. But now they have some options. You know, now they have, you know, they're just have a kid. They're down to one income. So now they're like, oh, well, shit, now I'm going to sell the home and, you know, walk away with a little bit of money. And this is after having a deferment, you know, on FHA loan. Right. And they're still going to possibly make some money.
Right.
So, got to get in the, and she even told me, she's like, you told me, you know, I have to get in the game to, if I want to do anything. I remember, she's like, I remember you telling me that because I was terrified of that payment.
Didn't she go with another lender on her purchase?
No, she went with another realtor.
Oh, damn it.
Yeah. She snubbed Brittany. She snubbed Brittany, but I did get her back to Brittany to sell her home. And Brittany took it like a champ and, you know, played it cool. And I was like, hey, you played it cool to her, and that's all that matters, right? We don't want to, you know, let our pride get in the way of our paycheck, as I say all the time. And you know, and now she'll get the better end of that deal, right? If she's able to sell this home. So if you get kicked to the curb, play the long game. That's all I do.
Hey, Danny, real quick out in Florida, I had a question for you. Is Danny on with us? Here she is.
Okay, I'm here.
Hey, I believe David had told me that you did a first-time homebuyer seminar. Was that correct?
Yes.
Would this not be something that would be beneficial to share with them at a seminar? Just even.
Oh, yes, it is. At this point, our one bedrooms are sitting at $1,800 a month in rent. So yeah, definitely.
Right. Nice. Well, good. I this is good stuff. I definitely think this is, you know, great to share with, you know, whether you're new to the market or first time home buyer. This is, I mean, obviously renting's not your best option ever.
No, it isn't. Not at this time. And even though the interest rate is where it is, like I said, I mean, at the same time, they're still going to pay the same amount they would pay in rent than they would pay in renting a home. And down here in Florida, a lot of the single family homes have their own, you know, rules. So a lot of them are asking for last month's rent, this month's rent, and security deposit matching the rent amount. Right. So if the rent is at the 3-bedroom is sitting at $3,200 in rent, you dropping that amount of money to rent a house.
Right. That's your down payment.
To own it.
Right.
You can own that home.
Yeah, I just closed a Chaffa buyer yesterday. $450,000 house up in Thornton, and she got a $5,000 seller credit, and she got into it for under $4,000 total. and she was already renting, paying, you know, $2,900, you know, in rent. Now her mortgage payment's gonna be $3,300 a month in rent, because we did get her, you know, at 6.25 before it did go up. But when you're utilizing CHFA and these other down payment programs to get them a little bit lower of an interest rate, you know, it's still better than, you know, not getting into the home, right? So they're like terrified. And then, you know, I was like, oh, expect 7 to 12, right? And then we got them 5K in seller concessions up front, part of the contract. There wasn't, you know, anything on the backside for inspections. So she got in yesterday for under $4,000. So it's a thing, right? So yeah, if you have some buyers that have 5 to 7K, 10K, and, you know, they don't mind, you know, they can kind of swing a payment. I have a lot of first-time home buyers that are grouping up together now, that are looking at purchasing, like, hey, well, I can't afford a, you know, $2,800 place, but why don't we go in together and have an investment, right? So in that way they can, you know, have that home, you know, together, and then sell it off, or, you know, do whatever they want to do on the backside. So
Hey, Jesse, real quick question. This two on buy down example that you've got shown here on the deck, does that fall, is VA fall qualify for this? Because
at the moment, yeah, there are some programs that are doing govies. It's a little trickier, so we are rolling out a new government one just to make sure. But at the moment, we are only doing conventional, but we should be getting an updated one that I can give an example of, you know, the government ones as well.
that would be fantastic. I would love that, because I just had my buyer terminate. We're set to close next week, and he terminated on his loan conditions because his VA loan, he just wasn't happy with that percentage rate he was getting.
Okay.
And I'm like, man, I've showed him everything that you've presented, you know, the rental calculations. I've walked him through, look, you know, one of the best ways is get into the home now. And, you know, at least you're putting money towards your investment, which is your home. At the end of the day, that's the end goal for, you know, for us working with, you know, buyers and getting them in their homes. But man, that's the one thing he just was not budging on. And
what was his
you know,
interest rate at?
he surprisingly, he had spoke with he had come to the table with his own lender, and he was getting, they had quoted him originally like 7.25. And I was like, that's a little high. I gave him to one of my good friends, and he was able to get him down to 6.5.
Yeah.
And I'm like, dude, this is a great VA rate for where we're at. And he's like, wow, let me see. And then he spoke with another lender who told him 6.75. And I'm just like, see where everything's at. And he just he could not justify to himself doing 6.5 to start. And he came from the Arizona market, which is, I mean, pretty much, you know,
the hottest market,
somewhat identical as to what we're experiencing here.
Yeah. Now, you know, did anybody talk to him about the Earl refinance for the VA loan?
I'm sorry, what was that?
It's called an Earl. It's an IRRRL. So it's a interest rate reduction loan. So that's the coolest thing when it comes to VA stuff, is that they can do a streamline, no verification of employment, no appraisals, anything like that. So if that rate goes down a certain percentage, they can refi automatically. You know, it's a pretty easy thing. So that's a good thing to kind of, you know, speak about on that front. So I have a borrower that's in the same.
I have a question regarding that, Jesse.
Yeah.
I have a question regarding what Johnny said. Like you said, his client pretty much, you know, of course, didn't approve of the 6.6% interest rate that he got. So he, you know, he stepped out due to the conditions of that. You know, as a realtor, we can't pretty much, you know, discuss lending policies with our client. It wouldn't be a good thing, because it'd be confusing to us as well as them if we're not in that area. How are we as a realtor going to explain to a client what's going on the lender side when they see something that they don't like and they want to step out? I mean, don't get me wrong, Johnny's explanation, you know, what he told his client was definitely right. But how do we, you know, what do we say to the lender to help us stop him?
Yeah. Yeah, I mean, you can do a kind of a last ditch effort kind of deal saying, hey, is there anything you can do for, for the rate for the payment? There's a thing called premium pricing when it comes to mortgages. The higher all these rates goes, the premium pricing is becoming a thing of the past, right? So I came from Fairway, was there for 7 years, and they will lose money on a deal just to get market share. That is slowly becoming not a thing anymore, to where the loan costs what it costs. But when you have, if you do have some wiggle room or anything like that, you can always say, hey, is there anything we can do, because he's about to terminate? And sometimes they can say, hey, we can go down to X, with an approval. And you don't want to get into too much of the lending thing. I totally agree with that. You just want to have, some ammo saying, hey, did you ask about this? Did you ask about this? Because, on a VA loan, after 210 days, which is essentially 7 payments, everybody says 6, but nowhere in a calendar does 6 payments come before or after 210 days, that you can look at doing an early refinance, right? So, and that's just kind of like a streamlined FHA, right? So, yeah, you don't want to promise anything or anything like that. You just want to, kind of give them, some options of, getting a second or third opinion, because it does help. But if, he's going anywhere from 6.75 to 7.25 down to, 6.375, I wouldn't doubt if there wasn't points added on to that, that 6.735. And that's why I always tell people, like, hey, I don't get paid off interest rate. Show me a loan estimate that's locked, and we'll see what we can do. And I'll be the first one to say, hey man, that's a smoking deal. Jump on it, right? I'm not here. I'm a used car salesman. I'm here to help people. If I can't help them, I'll tell them what to do, and I'll help them get a better rate for that person, right? Saying, hey, that's a great rate, but see if you can get those points cut in half or something like that, right? So when you're looking at it, I wouldn't get too in the weeds with that kind of stuff. But yeah, just having them look at multiple options is going to be helpful. But ultimately, the biggest thing is making sure they get the loan done, so you're not costing people earnest money and that kind of stuff, right?
Exactly.
Jesse, on this, on this example that you have right here, where the total savings between year 1 and year 2 roughly are the same cost as the buy down.
Exactly. It's exactly the same cost, because essentially you're just you're prepaying that interest up front, or the seller is.
Okay, I was gonna say, so the benefit is that the seller's paying
The
for it.
seller's paying for it.
The
Yep.
buyer's getting the benefit. Okay, otherwise I was
Yep.
like, what's really the point?
Yeah. So, and it just, it helps people with that rate and that payment shock, right? So it's like, hey, if you can save, $400 or $500, or $800 from your current rate to what your 2-1 buy down would be, then that way, that's what's actually money, that you're saving, because they're paying for it, right? And it sits in an escrow account. And then say after a year, say rates come back down, point or half, 3/4 of a point is really a threshold. If anybody tells you half a point, that doesn't really make sense, depending on how long they'll be in the home. So usually it's, a little bit more than half a point makes sense to refinance. Then that remaining amount would be, paid off on their principal payment. So it helped like prepaid interest and that kind of stuff. So, and we'll show you a 3-2-1. So the 3-2-1 example that I'll send it was $29,000. That's how much it was to do the 3-2-1.
Hey,
Find out.
Jesse,
Yeah.
correct me if I'm wrong, but this is also actually better for the seller too, right? If they end up taking less of a price cut and putting this cash up front, I think I saw something where they actually ended up netting more at the end of the day as well.
Yeah. So, to them, and I kind of say it's always like pretty much a wash, if they're going to do a price reduction of 15K, or if they're going to give the buyer 15K, it's pretty much the same for them. It does actually, it changes commissions a pinch, maybe a couple $100 if they keep it at that price and do a seller credit versus a price reduction, but it drastically helps the buyer, like over 300% improvement from a price reduction, right? So here's a number you guys can share with all your buyers out there is, for every $1,000 you take off of a loan amount, it saves you $7. So I have a lot of, first time home buyers like, hey, I'm going to put another 10 grand down, another 20 grand down. Like, hey, that's 10 grand. It's going to take you 3 years to save that up, and it's going to save you $70. So let's just not go to, Chipotle, twice this week, and, you'll be good to go on an average. Right. So, Yeah, it does not move the needle on a 30-year loan. That's a great question. So I'll give Jared and that, everybody a breakdown of updated 2-1 buy down, 3-2-1 buy down, that kind of stuff. Johnny, I'll let you know exactly the details on the government stuff as well. And great segue into government stuff is assuming a government loan. I put a government loan in there because a lot of people say you can assume a conventional loan. There are some loans you can assume, and what you're doing when you're assuming a loan, essentially you're taking over the current loan at the current rates in current term for the home that you are purchasing. Now, this is much trickier than it sounds. So say if somebody just bought a home last year and they got in at say 3.5% and they haven't made a bunch of payments, then if the person that is buying the house, they essentially, depending on, if they are VA or not, you don't have to be a VA, person to assume a government loan, but it does depend on the servicer. Okay. So say, if somebody did do a VA or an FHA loan and they're like, hey, we have to sell family stuff, I'm moving, the listing agent can then put in the broker's remarks, assumable loan available. And then, you might even want to call, or the seller might want to call and get the details on the assumption loan details from that servicer. So essentially they would be using the same servicer. So you wouldn't, if they're pre-approved with another lender, that other lender wouldn't have anything to do with the assumption of the loan. So that's why a lot of lenders don't teach people about assumptions, because it doesn't help me. But in this market, I feel like buyers need all the help that they can get. Right. So when you are looking at, a home that's had a VA loan or FHA loan for a long time, essentially they need to make up the down payment difference. And that's going to be the biggest thing. They're going to have to make up the down payment for whatever's owed, right? So if their loan amount is 420 or 400,000 and you're selling it for 500,000, then they need to come up with a pretty big chunk to assume that loan. But if they're already putting a hefty payment down, then they might be able to take over that much lower interest rate, right? So
real quick, Jesse, so what you're saying, so let's say it's a $500,000 house with a $400,000 existing or assumable loan, they would have to make up the additional 100,000 in cash and then
Correct.
assume the 400.
Yes. And that doesn't include closing costs or anything like that. So
and I think this is something we should remember. I think as a buyer, if it's not being promoted from the sellers, you could always ask if that's an option. If your purchaser has a 100,000, couple 100,000 to put down, that might be, a strong option to ask for as a buyer, but also promoting it as a seller if it is an assumable loan.
Yeah, and you can look up Realist or Title Pro to see what kind of loan they have. It'll say if it's a VA loan or a FHA loan. So the biggest
county records usually.
Yep.
So Jesse, let me play. I'm going to play devil's advocate, Jared and Jess. At the end of the day, our fiduciary duties are for our clients. We want to make sure we work 100%, 1,000%, 10,000% solely for them, and making sure everything is in their benefit and in their, geared towards them. So tell me, how would this be pulling an assumable mortgage in getting my buyer to, let's say, we'll walk down the example, my buyer, I talk him through this and he's all on board. What is for me, this seems just like, I don't know, maybe walking on some hot coals. I'm not too comfortable having him assume an existing mortgage in that sense. Help me understand what would be the benefit for him to do that.
Well, let's look at the 500s, the 500,000 scenario. If the home's worth 500 and they're purchasing at 500, they have the $100,000 to put down, so they're financing 400. If they assume a loan, let's say it's at 3% interest, they have that $400,000 loan at 3% interest, as opposed to qualifying at new financing at 7% interest.
Yeah.
So it is advantageous for your buyer, extremely advantageous for your buyer, because their payment is extremely reduced because of that reduction in interest rate.
Yep, okay. No, I'm
It's-
looking, that's how I was looking at it, Jared. I was wondering if I could poke holes into that theory.
Yeah, no, well,
Me being the person I am, my friend, I'm like, okay, what if we try to poke holes in the dam and see what breaks, you know?
and that's I think where I mean, it's a shot in the dark, you know, and I think, you know, more proactively, we need to be looking into these things for our buyers more so, you know, promoting it as a seller, great. We have assumable loan. The chances of it happening are slim. But if we know that our purchaser has the money or has the funds to put down, taking this route and strategy and approaching people, you know, price reduced homes that might be in an assumable position is a great option.
Yeah, no, I like that, yeah.
Hey, let's avoid your rate. Let's start shopping homes that are actually at a, you know, at a position where you could assume the loan from them.
Yeah, I like, okay, yep, I'm seeing that. Cool, thank you.
You bet.
Yeah, I mean, it's a really cool thing. It's, you know, it doesn't help, you know, the person that's, you know, pre-qualifying people. It doesn't help. This does not help me at all. But this is a really good option to get people into a home, right? So, you know, if this is, you know, if somebody was qualified at 5%, but now they're at 7, now they're not qualified, like, you know, it might be an option like where somebody's at maybe at 4%, right? So, you know, but they do need to get with the servicer to say, hey, I'm assuming this loan on, you know, taking it over. You know, like one of my buddies had a neighbor that was selling a house, and she was at 1.99% on an FHA loan. And she never refied out of it. She just kept it. And then they did an assumable loan. And the person put a huge chunk down. He's like, who cares about mortgage insurance on them at 1.99%? Right. Because FHA loan, it never goes away.
Right.
Right. So, but he's like, who cares? Right. I'm saving my money in, my money out. It's going to be a lot better if I have a 1.99%, you know, interest rate on a, you know, $500,000 house. So yeah, but I mean, it's not as easy as it sounds, you know. I mean, like, oh yeah, just take the loan over. Well, you still do have to, you know, prior to 1988, you don't have to have approval. So if they've had their loan for that long, you don't need like a lot of approval to get into that home. After 1988, then you do have to be approved by the servicer with FICO, with, you know, debt to income, that kind of stuff. So essentially they're doing another pre-qual, another pre-approval through the servicer. But you know what your terms are, right? So it's like, you know, if you know, if you're looking at the mortgage statement and saying, hey, you know, this is a 30-year fixed, you have, you know, 25 more, you know, years on it, but you're at X amount, you're at 5, you know, 3%, 4%, it's going to be a huge benefit, you know, for that buyer. And it's going to actually help them qualify with that loan to where even a 2-1 buy down, we still have to qualify people off of the highest rate, just like an ARM, just like any of those adjustable rate mortgages. We still have to qualify them at the typical, you know, at their today's rate of the 7%, because eventually they're going to pay that if they go throughout the term of the 2-1 buy down, right? So we're not going to, you know, pull a 2008, 2009 and not factor in people's student loans, and then all of a sudden they, you know, come out of, you know, Ivy League education and they have a $1,200 mortgage payment, or, you know, they have a $1,200 mortgage payment. Now they have a $1,200, you know, student bill. I don't know who's paying student loans before their mortgages, but people did it, right? So yeah, so I mean, that's, you know, the guidelines are way different now, so we're seeing a lot less foreclosures and stuff. But there's a lot of people out there, guys, that are going to need help, that are going to need to downsize, to sell, consolidate. So there's a lot more business out there than we're thinking. I know, you know, it's like, I don't want a listing right now. Well, you know, I'd rather have, you know, 10 listings and, you know, than nothing, right? I mean, you know, hopefully you can get a buyer out of it too.
Hey, Jesse, so how is assumable mortgage beneficial for a seller? Why would they want to do that?
It might help somebody get in their home faster, right?
Yeah.
So it's something to where it's like, hey, you know, that's a selling point for the seller. It's actually a benefit for the seller saying, hey guys, I have this loan. This is an awesome loan. You guys could take it over. And here's where my payment is, you know, and you kind of know what you're getting yourself into, to where, you know, it's kind of like offering a seller credit, you know.
Akila, you know, if it's somebody that's been in the house for 20 years, it probably may not be attractive because they have a low principal balance, which means that there'd have to be a huge down payment. Whereas opposed to if it's somebody that bought the house a year, 2, 3 years ago, they might have a high principal balance still and a low need for actually covering that difference. But I think, you know, to Jesse's point, if you're marketing it up front, it might also help you avoid price reductions and extended time on market because it's more attractive, you know, in that element.
Hey, look what I have. You know, I have a shiny 4% or, 5% interest rate.
I have a
Yeah.
guy, yeah, I got a 3, I got a 2.86 FHA, you know, from 2000, you know.
I guess what I'm really not understanding is if somebody is taking over the loan, then how is the seller getting paid?
So the sellers, well, so remember for the scenario of $500,000 purchase price and they owe 400,000 on it, the that loan balance is being assumed by the new buyer. All of that additional cash that's brought to the table would be that basically net to seller.
Okay. All
So
right.
the buyer would have to bring the
The
difference
difference,
from what the seller's selling the home for to
correct.
what their loan amount is.
Correct. You would either have to have a private line of financing or you would have to have the cash available.
Plus closing costs.
Correct.
So basically, you're saying that they don't really have much equity on this home to begin with, so that's why the buyer is able to afford to buy out the
It
loan.
varies. I mean,
So
if
I'll
you
give
bought
you,
a home a year, go ahead, Jared.
I was
You're
gonna say, I'll give you a good scenario. I had a client, a seller, and the purchaser, we didn't end up assuming it, but it might have been a nice scenario. But if the seller had an assumable loan, our buyers put $400,000 down and only financed another 400. So if they had an assumable loan, their buyers could have taken their rate and still put that $400,000 down and financed the rest at a better rate.
How do you actually qualify for an assumable mortgage, Jesse? And let's just say in order to have gotten that 1.99 interest rate at the time, you may have had to have like a 780 plus credit score or whatever. And now you maybe only have a 680, but you have the cash to make the difference. Can you still actually assume that if your credit's worse than what the original purchase was?
Yes, yeah. So and it's going to be all servicer dependent, right? So, that servicer doesn't want to lose that loan when you're thinking about that, right? So it's like when you go through, when you have servicers doing a refi boom, they're just dialing for dollars, right? Because they know that if they don't get a hold of that person, then they're going to lose that loan. They're losing all interest, right? So it is in the, benefit of the servicer to keep that loan, because if they don't keep it,
They're
then
losing it anyway.
they're losing it anyways, right?
Right.
So it's like kind of dropping, mortgage insurance. Servicers are becoming more friendly with that. Now that rates are higher, they're like, you're not refining, so when rates were low, mortgage, servicers were a lot more helpful, right? Now the rates are high, they're like, yeah, if you want to refi and go pay higher interest rates, drop your MI, go ahead, right? So, but it comes down to if they want to keep the loan, which most of them do, then they will help you kind of figure that out. So, but yeah, I have 2 people that are inquiring about some loans that are VA. So if I get some details and examples, then I'll definitely share those with you guys and let you know how that goes. And the biggest thing I had a question on was, hey, what's the time frame for this? Right? Essentially, it's almost like a refi. So the 2 servicers I've spoken to, Flagstar was one of them, and they're like, yeah, maybe 3 weeks, right? So, and that was not, that's just all overestimating, type stuff as well. So as I get more details through it, because this is going to be more popular for you guys and this is something you guys can kind of promote as well, I'll kind of keep sharing information with the team, and so you guys can kind of have a little more details on it. So
Jesse, since you say that conventional loans are not assumed, so if it's just FHA and VA, there's a cap then, right?
for your loan amount, correct? Yes.
Yeah.
Yeah, just the loan amount. Yeah.
And remember, the loan amount is already going to be under the limits because it already exists.
Exactly. So that's not going to be an issue.
Okay.
And remember this. So I mean, big picture. Long story short, I think this is good conversation. The chances of this aligning, both in a buyer spectrum and in the seller's willingness to participate as well, is probably slim. But I think the chances, if we know that it's an option, we can look into it. If we speak to it to our buyers and sellers, it only makes us sound more intelligent anyway. So
That's true.
Yeah, it's literally just you're becoming the educator and you're becoming the professional, right? So in these tough markets, you're going to be showing value if you even know about this or if this is even an option. Like,
Totally.
man,
Wow.
that dude knows his shit. Like,
Right.
you know,
I didn't think of
100%.
half of these strategies. Right.
Exactly. Right. So
Yeah. No, and this is one of,
Jeffrey,
and
I'm sorry, is it safe to say that basically it really doesn't affect the seller at all because either way they get their money at the
Yep.
end?
Yep. So the
It's
only
good for everybody.
caveat, yeah, so the biggest thing for VA is that, you know, because when you have a VA loan, you have entitlement that is tied up into that. So then that way the servicer would need to make sure that they're in, you know, reinstating that person's entitlement and making sure that they're off that loan, right? So if they're going to go buy another home, you want to make sure that the servicer is taking care of it, saying, okay, technically this borrower, this veteran is no longer, you know, attached to this home, to make sure their entitlement is not messed up for their next purchase. So just another, you know, things to kind of think outside the box with. And, you know, even if you're trying to, you know, get, you know, a conversation started, you know, this might just be a good conversation starter to kind of, you know, get somebody to connect that maybe hasn't been calling you back.
Good stuff. What else you got?
That's it. That's it for today's lesson, boys and girls.
There you go.
That was super, super helpful. Thank you, Jesse.
No, thank you guys.
You
Like
know,
I
I
said,
think
use us as a, you know, a sounding board, and, you know, let us know if there's anything you guys want to learn about, you know, coming up. So.
Yeah, I think the biggest thing that we want to accomplish, I think these days, you know, is really just, you know, we have to be the voice of support for our clients. You know, if we're doom and glooming and saying this isn't the time to buy or sell, you know, they'll follow suit. So I think, you know, we wanted to put this together so you guys kind of had a little bit more fuel for the fire, a little bit more conversations with your buyers and sellers, you know, to remind them, you know, historically over the last 50 years, the average is 7.65 on an interest rate. We're not even there yet. You know, so don't be afraid. You know, even with rates here, we have options 3-2-1, 2-1 buy downs. We've got additional options with, you know, assumable mortgages and assumable loans. You know, having these options and scenarios, I think just makes us sound more intelligent, but also, you know, provides our buyers and sellers more options too, feeling a little bit more secure. So this is good stuff. Thanks, Jesse.
You got it, guys.
Thank
I'm
you.
gonna jump on another conference call, another Zoom call.
There you go.
Bye, guys.
Thanks, Jesse.
Thanks, guys.
thanks,
Bye-bye.
Jesse.
Bye. If everybody wants to stay on, I got a couple things that I was going to share with everybody. I'll try and keep it to the next 20 minutes if you guys have time. I kind of wanted to spend a little time on, I guess, anybody have any questions about what we just went over? Any thoughts, comments, question, wishes, hopes?
It's great information. Thank you.
I think so. I think so. I think, you know, beyond the information is just actually utilizing it too, you know, get excited, you know, share some of this, you know, even if you shared some of these ideas on social media, you know, it kind of displays you as an expert, but not only that, it gives people, you know, ways to have conversations with you too, you know, so definitely utilize it. Anybody else, any questions about what we just went over? No?
Well, Jennifer, is Jesse gonna send more information about the 3-2-1 buy down? Because that is actually really good information to share, and I do have a few buyers that, you know.
I'll touch base and make sure I get all of those slides and share them with everybody. And then I would also just reach out to Jesse personally, or if you have a preferred lender that you use, check in with them on what their options are. If they don't have them, obviously reach out to Jesse. So he's definitely a great guy in an open book. Somebody I'd definitely recommend. Who else had something? Was that you, Johnny?
No, I was just gonna make a comment earlier for Danny when she had made the comment of, yeah, let's, you know, providing a certain amount of info to our clients, you know, not talking to them about loan, you know, pieces. She's 100% spot on. I'll always defer to my lender and be like, hey, let's get on the phone with him and have them, you know, explain to you exactly all the different moving parts involved. So that way there's no miscommunication from my end, you know.
Absolutely. And I'm in the same boat too, though. I mean, ultimately we need them to get to a lender and work through the financing piece too. If I claim to be the expert, they usually stop right there and they're like, oh, well, you already shared everything I needed to know. So I'm with you on that thought.
Exactly.
Danny, did you have anything else? No?
I do.
Ashley.
I
Oh.
wanted to share that since they were talking about, I never heard about the 3-2-1 buy down, but I have heard about the 2-1, and I did utilize that program personally. We just bought our house, and so it really helped out tremendously. Like, you know, obviously we're hoping that rates will go down for year 2 and 3. But even at that, our rate is still less than what it is today. So
Right.
we got in at a pretty decent rate, and we got the house that we wanted. The seller paid for our 2-1 buy down, which was huge and generous, and did everything we asked on the inspection objection. So sellers are being very generous and giving. We didn't ask them to reduce their price. We just asked them to do the buy down, and they were so happy to do that. So that is something that is an option that is effective. And I know firsthand.
There you go. Nice. Is that your new house behind you?
It is.
Yeah.
It's a mess. It's a mess of a kitchen right now.
Congratulations.
Thank you.
Nice. Good. I love it. Well, you know, proof's in the pudding. So, I mean, Ashley
is.
gets to speak to it now specifically. So it makes it a little bit more,
Yep.
a little bit easier to articulate to other people.
Yep. For
If
sure.
you have any clients, send them to Ashley.
Yeah, I'd love to help them.
Good stuff. Anybody else have anything?
I also just went under contract last night with the buyer for who we got $13,000 for a 2-1 buy down,
Nice.
plus an increase for my commission.
Everybody
Yeah.
won.
Yeah, for sure.
So you asked for 4% instead of 2.8.
No, it's Redfin. They were only offering 2.25. And my clients were like, that's not okay. Which I was like, well, thank you.
Nice. There you go. Good. Congratulations.
Thank you.
So I've got two little scenarios. I'm going to share my screen real quick with everybody. I went ahead and kind of put together a couple lead gen scenarios that we can accomplish by the end of the year. Everybody can you see my screen? Yes.
Yes.
Yes. Okay.
Yeah.
Yes. Okay.
Yeah.
So I've got two kind of ideas that I wanted to throw out to everybody. I think the thing is we're in the last quarter of the year. What can we be doing to stir up more leads maybe for next year, but maybe even just some buyers and sellers by the end of this year? I kind of always go back to our sphere of influence, friends and family and past clients as kind of a best source for us to actually prospect and find leads from. It's one of the easiest sources. It's free. It's available to us. So really, sphere of influence for me is one of the easiest lead sources, to be honest with you. So really today I went and set up two scenarios. The first one that I wanted to chat about, why does it seem like it's all funky colored? Is it just me? There it goes. Okay. So one of the things that I've always promoted, and one of the agents that I started this with had a lot of great success with it. It was really just, in the office today, how can I help? And that's connecting with any past clients, your sphere of influence, friends, family, even acquaintances. But this was something that I challenged one of our agents to do. The individual reached out to 15 people on their Facebook page through Facebook Messenger. From the 15 people, they found 3 buyers out of it. Is that a pretty good ratio if you reach out to 15 people and find 3 buyers out of it? I'd say so. 1 in 5. I'd say so. 1 in 5.
That's a lot more. I got 1,100 friends.
Right. That's it. Needless to say, the individual that participated in this activity never went past the 15 people. Did it one time and stopped. I'd like to encourage everybody to do this with with their database and really just see what they can get out of it. Here's what it is. In the office today, how can I help? Your target is your friends, family, past clients, sphere of influence. Our goal would be to offer a property search or market report with the goal of setting a buyer's or seller's consultation. Minimum objective is offer your sphere of influence, item of value, and grow your client database for the future is ultimately what we want to receive. I'm saying the activity is scheduling 3 hours of uninterrupted and dedicated time. 3 hours could be one day on Monday, or sorry, 1 hour Monday, 1 hour Wednesday, 1 hour Friday. But really dedicating at least a 1 hour block, I think, is imperative to this. But schedule a 1 hour block of dedicated uninterrupted time in the next week to reach out to past clients, friends, and family sphere of influence, and then offer to set basically that dream home property search, or if they could use comparable data for a home that they own. You could accomplish through phone, Facebook Messenger, text, email message, or text or email. And here's basically all that I had the individual say was, hey, now I'm going to use Haley, for instance. Hey, Haley, it's Jared. I'm in the office today. I was curious if I could send you a market report for the property that you own. If they don't own a property, kick that out. Love to see if I could set a property search for any of the areas that you're considering. Let me know if you'd appreciate what you'd like to see. So really the question is can I set you on a property search if you're thinking of anything, or can I send you market updates for the property that you own so you can share and see value? I think one of the easiest ways to do this is, hey, I'm in the office today and thought of you. I think the reason I like saying or sharing that I'm in the office today is, I mean, our office could be at home. Our office could be, at Starbucks, wherever you are dedicating that time. I think when I said, or when I had them share, hey, I'm in the office today thinking of you, it makes it a little bit easier for them to be like, oh, okay, well, that's why you're reaching out wanting to share a property search or actually wanting to do a market report. As far as it goes, David, I got a question for you. In the Florida MLS, do you guys have an ability to set up like an e-property watch or a property valuation report through your MLS?
I would imagine we do. We use also Matrix MLS. So whatever you're able to do, we can do the same thing.
There you go. So, and I'll pull up just in RE Colorado and show you guys what that looks like real quick. And it might be real similar in Florida.
On an off chance, did you see the email yesterday that you guys are getting a new MLS?
I didn't read it, but I did see it.
Yeah, Matrix is going away.
Ooh.
Yeah, David, I saw that too, and I was just like, oh, great. Another
now we got to relearn everything.
But it kind of looks like it's going to be pretty cool, just from what I was reading.
Honestly, I think Matrix is awful, so hopefully it's a good change.
I like Haley's attitude.
Yeah, I'm hoping. One thing I'm curious to know what all they're going to change.
Well, and that's
seems like it's going to be more modern, more tech savvy for today's agent.
Right.
Yeah.
Right.
The only thing I would hope that they would change on the Matrix is the readability of a client opening that email.
As far as how many people are actually right. So as far as it goes in our MLS, e-property watch is what we can offer and set up any of our clients on to send them a monthly email with their valuation updates. To be honest, that's what I send to all my past clients. I put them all on that e-property watch. And then when I reach out every month, I just say, hey, just checking in. Did you see the valuation of your home? Hey, just checking in. Did you see where your value was at? Hey, did you notice the appreciation? Hey, did you notice the depreciation? Breaking the ice and using this approach. Hey, I'm in the office today. I'd love to set you up on that property watch for the property you own. Or I'm in the office today. I'd love to set a property search. Where would you like your next home? I think that's one of the easiest ways for us to approach our friends or family sphere of influence. Offer an item of value, but also get them into your database. Start sharing, start opening that line of conversation. I wrote down here at the bottom, note, the goal is to get the conversation started and flowing. Once they agree to one or the other, you can begin to grow the conversation where they want to take it. Make sure to ask more questions. I included a few questions. Okay, great. You want me to send over a property watch for you. Do you want to know about the city? Do you want about your particular neighborhood? Would you be interested in knowing the actual value of your home today? Why would I want to know if they want the value of their home today?
Well, because you want to entice them to sell.
You know, I want to know if they're at least considering selling. I think asking open-ended questions like this, when's a good time for me to stop by? We can chat away about your valuation in detail. Instead of me saying, hey, you mind if I come by and share it with you? I like asking questions where it's like, hey, when's a good time for me to do it? And let them turn you down as opposed to let them, you know, pick a time. I think the biggest thing is not to miss the opportunity to ask for the business or the appointment. If we're not setting buyer consultations or selling or listing presentations, we're kind of listing the opportunity or the money making, you know, activity that's setting new buyers and sellers consultations. As far as it goes for buyer questions, what areas are you considering? What's important to you in a home? What are some of the things you won't consider in a home? And are you available this week for me to come by and share my buyer's workbook with you? This example comes from a time where I shared it with an agent. They reached out to the 15 people on Facebook Messenger, received 3 buyers out of it. That's a 1 out of 5 chance that you're going to get a buyer or seller. I think this was probably the fastest way that I had somebody finding leads, and it was within their own network. The individual has, I think, like 3,000 Facebook friends, and they only reached out to 15 of them. What could they actually be getting if they actually use this approach on all of their network? Any comments, thoughts, wishes, hopes on this particular one? You know, I think this is something that could be easily done within an hour. If you did it three hours within a week, you'd find great results. I think the biggest thing, once you start the initial conversation, maintaining and following up with those individuals is where you'll end up getting them. Thoughts, comments? Did everybody receive the email yesterday that we sent out with kind of the weekly updates? Yes, we did. I will open it up just to share real quick. In the actual email, at the very bottom of the page, it has a resource tabs. This is where you can find your sellers and home buyer workbooks, contract submission, lead order forms, and so on. But seller's guide and home buyer guide is at the bottom of that resource. The next little, I guess, little lead gen tip that I wanted to share with everybody. It's actually just sharing that buyer's workbook on a landing page to help drive business. Share your buyer's workbook. Target is your friends, family, past clients, sphere of influence. Goal would be to share your buyer's workbook, adding new leads to your actual database. Activities is create and publish a landing page inside your agent branded website, promote and share online through text, email, and email out to your client database. And obviously you can do this, offer the workbook through phone, Facebook Messenger, text, or email. Here is, I guess, where I wanted to show you guys. Let me duplicate this. We did just recently update the CRM. Thank you, Haley, for spearheading this. I think we're going to get quite a bit more out of this than we have in the past. It's got a huge amount of support for promoting listings, a lot of social media support. It has the ability for us to actually schedule and automate our social media posts if we want to do them in advance. But today, really, I just wanted to go over creating that landing page. As far as it goes for creating that landing page, log into your CRM. If you guys go to this link, and I'll share these tiles, if you click here, if you can't access your CRM, just click forgot password, use your email, and it'll get you back in immediately. We'll want to go to campaigns. Campaigns is this little arrow at the top, the little, I guess, what, paper airplane? Brittany's over here like, it's one of these. Paper airplane at the top. If we click that paper airplane, it brings us to a menu on the left. Right in the menu, it says landing pages. If I go to landing pages, right here, it gives landing pages that are already created for you, or you can create one from scratch. I would go ahead and skip that and go right to the buyer's guide landing page. Change the name, buyer's guide, go buyer's workbook, whatever you want. Lead source, I think, is important to change, just so you know, buyer's workbook landing page. So I know that they went to the landing page, and the reason I got that lead is because it was sourced from that particular activity. Save it. See how it just auto-generated the URL right here? I would kick out all the rest of it. Buyer's guide, Titan One Realty buyer's guide, save. Once you save it, it'll actually pull up this screen, which will allow you to customize. I'm starting to get that photo where like I should have updated my photo already. Am I in the industry too long where my photo doesn't look like me anymore?
Oh, you're fine.
So we can personalize the header. If we go right here to the edit button, it'll bring up the header here. I don't know if you want to keep the little hippie dread-headed girl in the background or if you want to change her, but you can change the photos here. Here's where you would change a desktop image or a mobile image. If we keep scrolling down, we're looking for where it says our personalized guide. You might want to change this to where it just says maybe your personalized guide. You can change the font, 60, maybe I want to make it smaller so it's one line. All of this can be customized to whatever you want. You can also change nothing. You could just leave it the way it is. I can come down here. This is where we definitely want to edit. Right here it says get your guide, how to buy a home. I could change all the verbiage in this section here, which would be this section here. Name, email, phone number. The biggest piece here is submit. We need to now add, right here's where I would add that workbook. In the actual presentation that I'll send out, you can download the workbook here as well. So I'll have that included. Once you download that workbook, we're going to upload it into here, add the workbook. Now, when they actually get to that landing page, they put in their name, email, phone number. It'll actually download that workbook for them instantly. Right here, you could change your photo. You could add your description, add your bio, add any of the details that you want about yourself. Last thing for it is just to publish.
You can also add more blocks to it if you wanted to.
You could, and I would say keep it simple right now. But what Haley's saying is adding additional blocks, additional information. Maybe you wanted to add a property search tab. Maybe you wanted, I'll show you right here. Let's go to add. It brings up all of the things that you could add for it right here. Featured listings, featured areas. Let's go to here's a listing list. Recent search. You can basically add and customize this any way you want. Featured listings. So all of that can be customized how you want. I would say for now, keep the landing page simple. You could add a search tab just so they could start searching immediately as well, whether or not they wanted to. Sorry. But I think with this one, I would just keep it simple and stick directly to just that workbook. Once that's published, the campaign's actually published, it'll show up down here in your campaigns. Buyer workbook. Here's what's easy about this is now from here, you can actually send this directly to, sorry, I don't want to copy it. I can send this directly to the database of leads that I have in my system. I can also click on the actual URL itself. Here's the URL. I can copy this, text it to friends and family. I could copy this and post it in, add it to one of my emails. This can be shared any way you want just by the URL. One other thing that what's that, Haley?
Sorry, you could schedule it to post.
Right here, that's the next one. That's this little block with the arrow. If I click that, it takes me into the social studio. I already have my Facebook account set up. I can add an Instagram, Twitter, LinkedIn, and then this is, what is this? Google My Business. All of these accounts, you can then post this directly to. Check out my new guide. Down.
I'm in love with that feature.
What's cool about this too is you can post it immediately, or you can schedule it to post at a later date.
And so here's, download my free guide here. Here's where what Haley's saying is this can be posted instantly. I can post it now, or right here it says edit. You could schedule that for next week on Wednesday. You could set it up to where it'll repost every Wednesday if you wanted. You can schedule this out to where you can accomplish this anytime you want. But once you basically set it, I'm just going to do it immediately. It immediately then posts to my Facebook account, shares the opportunity in that landing page, and then immediately can start helping me generate leads. One thing that we can also do, and that I added on here that's a note, is once you have it on your actual Facebook page, you can go on there and actually boost that post as well, and try and generate additional leads and additional individuals from it. Really, the biggest piece is really just trying to find additional ways for us to get this content out to everybody. But really creating those landing pages ensures that not only do you get their name, email, and phone number, but they get added directly to your database as well, so you can start that communication as well. That is what I've got for as far as it goes. I think the biggest piece is dedicating uninterrupted time to generating and working leads. And I think if we just use just these two approaches, even over the next couple weeks, we're going to find people who are interested maybe in the buying process and would appreciate having that workbook. But not only that, if we reach out to our friends and family, hey, I'm in the office today, thought of you, would love to set you on a property search or let you know what the value of your home is. We're providing items of value. Anytime we can provide items of value, I believe that that's when we're winning as professionals, as opposed to just asking for business and not offering anything. Any thoughts, comments on these two routes or strategies? Haley, what do you got?
I want to just add a couple things. If you want how you reference sending out like market reports or what have you,
okay,
you can do that directly from Chime as well.
You can. The only kicker is you're limited to 4.
That's not what I'm actually talking about. I'm referring to the like the area, for example, like your zip code. Can I share real quick?
Yep. You should be able to share right now.
Okay. So when you're in Chime, if I can find right here. So when you're in Chime and you're in your leads, I don't know what I'd call it, their profile. If you click on engagement, here's where you can create a new property alert where if you wanted to add them, so a specific property search or market snapshot, market report, home report, seller report. The market snapshot, when you set this up, it's pretty easy. It will email them this report. This is what it looks like. So it'll show the active listings, pendings, the median price for their specific zip code. They can click here to go log into your site just to search. And then what it'll do, if you haven't already set them up on a property search, Chime will automatically keep track of what it is that they're looking at and start sending them listings that are similar to that. They can request to actually find out their value, their actual value. It just shows stats, and it's all something that's just done very
automatically.
Yeah,
Can you show where you set that up again?
Yeah, you are in.
Just go to your lead.
So I have it set. This is a lead. Matter of fact, another thing I want to add is that our group hosted an event and I forgot my sign-in sheets. So how you just created a lead, a landing page. I was within 5 minutes able to create a landing page that was with the call to action, a form where they can just sign in their information right there. And it took me 5 minutes. I did it from my iPad.
Right.
But anyway, when you're in your client's profile, you enter in all their information. You definitely obviously need an email. When you click on engagement here, you would then click under market snapshots here where it says new snapshot. And I don't have an email in here, so I can't.
Hanson, do you have you set up as a lead?
Let me try this. I don't know if it will let me use that.
I just make it up.
You could always use me, Haley.
I don't know. What's your personal email, Andy?
It doesn't have to be a real email. Just make one up. It doesn't matter.
H20 at
Gmail. Done.
Gmail. Well, it might automatically set them up. So, and then property address. Under place. There it is. You can label as home. Is it their investment? New pipeline group, whatever it is. You can, what's really cool is you could tag them so many different ways. Add your notes here. No, I don't want to send them a welcome email probably on this one. So here, refresh. I don't see me. Am I crazy?
No, this is the one thing that I have a hard time with. I had a new contact and I can't find where it goes immediately.
It's right there
You
at the
have
top.
to, there it is, Haley
Yep.
test. You have to
just
clear
have
out
to add the
your filter.
Filters.
So engagement, now new snapshot. So location, you know, honestly, all I did was
Aurora, Centennial.
did zip code. What I did. I think you could even do by neighborhood, but see all of this, it's going to show it. I think that's all I did just to test this out. No. Next. We'll call it Thornton snapshot. Frequency, you can do daily,
Weekly,
monthly. Customize the email subject. Check out your market. The days that you want to send it on. And now it's set up. And
Done,
it's probably
easy.
sent it to h20@gmail. Yeah.
Easy,
But,
easy.
I mean, it's that quick.
So here's the thing is if you guys start going in and playing, I'm going to send out some more of the training material, the training links, so we can start utilizing the system a little bit more. I'm also going, I'm not also going to, we're in the midst of everybody's leads are being uploaded and added into the platform. So if you sign in and you're not seeing all your leads, those are getting worked on as we speak. Some of
And I'll tell you, I shared it with Jared this morning. The AI software on Chime is bar none. I had a lead come in last night around like 9 p.m. Obviously, I wasn't going to mess with the lead immediately. The lead assistant's name is Anna. She started messaging the lead and it had me fooled. I thought somebody was actually in my system conversing with the lead. I mean, using modern slang like gotcha, I'm on it, sounds great. And it was a fluid conversation. Wouldn't you say, Jared?
Well, so actually I sent it to myself, so I'll share it with everybody. And so what David's talking about is when we have new leads, or so for instance, if you start sending out your property search page and somebody signs up and starts searching for properties, they'll automatically start getting prospected through the system. And here's what David's talking about. Can you guys see that? Okay, so here's what David basically sent me this morning. Here's David's conversation log that the AI assistant had. Hi there, thanks for reaching out. I'm Anna with Titan One. How can I help? The person says browsing what is available in the area. I'm planning on a change. The AI assistant says, no worries. Would you like me to send listings or information in a particular area to keep you informed on the market locally? What locations are you interested in? Lead says Orlando around Dr. Phillips, Metro West, and Windermere. AI assistant says, gotcha. What's the price range you're looking to stay around? The lead then says, 600,000 to 700,000. Noted. How many bedrooms would you like? How many bedrooms would be ideal? 4 with 3 baths. Got it. Thank you so much for the info. I'll put it together, a list of homes that you may like and send them your way. Here's my phone number, basically. The lead then comes back and says, sounds good. How helpful would that be?
Yeah, I was impressed.
Right. So David went from generating a lead, that lead automatically went through the system, got prospected, already has a search set up in a similar area. But not only that, David can pick up the conversation right where it left off.
And I exactly did that. I called the lead. Unfortunately, I probably caught her at work, left her a voicemail, just said, hey, you were conversing with Anna last night. She kind of helps me after hours. Just wanted to connect with you personally to pick up where you guys left off and introduce myself personally to you, as I'll be the one helping you. It was easy conversation. It was a message, but easy transition.
An easy one-sided conversation. Love it. So good stuff. Love it. Thanks for sharing that, David.
Also, is anybody, I mean, when you have a listing, is anybody doing reverse prospecting, actively doing any reverse prospecting today?
I guess, does anybody even know what Haley's referencing?
So I mean, I'm sure you see it every day. You get in your email and you've got, a price adjustment, or, hey, we have a match, or something like that.
Hey, client 34721 likes my listing.
Yeah. We have the ability to do mass and bulk email in our agent platform, which is great. What I've been doing is daily going in to Matrix. Should I show that?
Sure.
I'll actually go.
Now keep in mind, this is for Haley's listing specifically. If you don't have an active listing, this won't work.
You log into your Matrix, hover over My Matrix.
Oh, you're not sharing.
Oh,
you can though. There you go.
There, back up. Hover over My Matrix, My Listings, and then you can select whichever listing you want, and then you'll click on Reverse Prospect. And this is literally a list of agents that are active, that have emailed, but they have a client that is set up on an auto search that is receiving or has received your listing. So what I do on a daily is I'm looking to see who's hearted it, and then I'm picking up the phone and I'm calling them. If they don't answer, I'm texting them, I'm sending them the listing.
You're reaching out to that agent specifically. Let's say
I absolutely am, and I'm saying, I just want to call and introduce myself. I see that we might have a match.
Hey, I'm stalking your client.
Yep. And I will tell you that I have had 2 agents schedule showings right after that call.
Nice.
So, and then what I'll do is I'll actually copy this information. I'll highlight, copy. I will then save it in an Excel spreadsheet and upload it into our agent platform. And I'll send out an email. I've created an email very, very easily. Sorry, Mike.
And remember, you can send this directly from your email as well. Once you have that database or list of names, I think if you start adding them into your database, you might get inundated with names and numbers that maybe you don't want, as opposed to just copying all of those emails and throwing them into, Google will let you send 500 emails a day. So if you put all of those individuals into a list, you could send that out as well. But I like
what I do is I send it in one bulk email, and one time I create the email one time and send it out to everybody saying, hey, we have a match, which they've already gotten it, but I'm sending it again specific to them. So it's not just the listing that their client's getting. They're getting an actual, hey, I have a new listing. It will match your client, and it's something pretty that I've created in Canva or Zipfly or something like that.
Haley, will you go back to that list of reverse prospects?
Sure.
Here would be something I would also share too, is if I'm on a listing presentation, could I not add this to my presentation to say, hey, this is an example of the information that I get, and I can actually see who sees it, when they see it, who favorited it, And not only do I get to see all this information, I reach out to these individuals specifically and then try and induce additional traffic and attention for your property. I think this is something that people don't share on their listing presentations that would be a distinguishing difference, but it's also something when I have a listing, I say that I do this. Okay. You might have heard what I just said. I say that I do this. You know, but I say usually every week I say, hey, just reaching out to everybody and doing reverse prospecting. And I say these things on like Monday, Tuesday, by Wednesday. And then I say, so it should stir up more attention and traffic for our weekend. Then usually by Thursday, Friday, we start seeing the showings popping through. My clients think that it's something that I did with reverse prospecting. Whereas Haley, that's what Haley's saying. This is exactly what she's doing, which then induces those actual appointments being set. Hey, you had a client, they favorited it, just wanted to bring that to your attention. And then them setting the appointments, it actually helps, you know, our sellers find those buyers.
But not only does it help with when you're in that appointment, saying what you're willing to do, if you're actually doing it, like what I do is I update my clients weekly with how many new people are on this list, how many have favored it, you know, hearted it, how many have marked as a possibility, you know, in conjunction with how many showings we've had, because we're at a time where we are seeing listings sit longer and clients really want to know, well, what are you doing?
Right. And I think that that's it, is we have to be able to speak to what we're actually doing. I like it.
Ask the question.
What's the question, Mary?
Hey, on Haley's thing, is that your digital business card beside your head?
It is.
Yes.
Did you scan it?
Can we? No, not yet, but I want to know how to do that. Is it on Canva? I mean, or on yeah.
Zoom.
Oh,
Yeah,
what is it?
It's I actually subscribe to an electronic business card service, and they create a whole bunch of backgrounds and everything that you can insert into Zoom.
Oh,
I'll share it with you though.
what is the service? Just let me know real quick.
Hi, hello.
Hello.com.
Yes, sir. And I will tell you, if I could share this with you, for those that have listings, are they doing open houses? Might sound like a dumb question, but it's a real question. I mean, are you doing them? Or are you having other people do them? That should probably be the better question. The reason that I'm saying this is because I hosted an open on Sunday. I didn't take any of my business cards. I used my electronic business card. And I would ask, can I send you my business card? Well, now I have to enter their name and their phone number. Now I have their contact information and they don't feel forced to register.
Right.
I personally also take my iPad with me and offer to run comps when I'm in a conversation. So I was able to land a listing appointment for this Saturday for somebody who is looking to sell their townhome and purchase a new property. Unfortunately, my listing wasn't a fit for them, but they want to meet with me on Saturday for, you know, for a consultation, which is great.
Love it. That's the whole point of doing an open house.
Yep, absolutely worked out.
Haley, Akila asked, she says, hi, Jared, can Haley teach a class? She has great information. We'd really benefit from it. So yes, Akila, Haley is going to be helping me with next week's class. We're going to be diving into the CRM a lot more, and really teaching a lot more of the functionality, how to use it. Hopefully by then we have all the leads uploaded as well. So yeah, everybody should be all set up by next week. And yes, Haley will be there.
Yes.
In all her glory. Well, that's kind of what we had for you guys. Anybody have any comments, questions, wishes, hopes? There you go. Happy Tuesday, everybody. That's what we got.
Successful week, guys.
Definitely. I'll send out the recording, send out the presentation. I'll share Jesse's information that he shared as well. And if you guys need anything at all, just let us know.
Thanks, Jared.
Thanks, guys.
Bye, guys.
Thank you.